Good evening. It's Vijay here. Today is Sunday, 24th of August 2025. This weekend, these are weekend reflections. We talk about what will happen, what has happened last week, and what is likely to happen the following week. Now, last week was not a good week for the bulls as far as the Indian markets are concerned. FIs continue to sell. And on Friday, for instance, the bulls gave up hope and a lot of selling again because people feared what Jerome Powell, the head of Fed, will talk about in his conference in Wyoming. That was the big thing, the Jackson Hole conference. So now you see the market went very fearful into the weekend. Of course, we actually bought quite a bit across the board. We bought because we believe that Powell will be pivoting towards a dovish attitude rather than going towards a hawkish. They've been maintaining a very hawkish attitude, and Trump has been hammering them. So I was sure, more than sure, that he will give up, and that's exactly what has happened. So you see, most people may not really, at least in India, may not really look at what happens in the Jackson Hole symposium, and they may think that okay, we'll have to worry about FII numbers, we have to worry about whether Trump will put 50% tariff, and so on and so forth, and corporate results. Now, while that's all true, while these are important, but equally important is what the Fed does. And the Fed moves markets globally, it moves interest rates, it moves asset classes. And so that is what we also have to look at. So here I would like to focus on things which will affect us indirectly, but first it will affect the global markets and specifically US markets directly, and our markets will come indirectly. And we are at a vulnerable stage in terms of where we are down, FIs are selling, and Trump is going to put that 50% tariff. Well, vulnerable as far as the bulls are concerned, but I think on Friday Powell gave a tonic to the bulls, and I think something significant is going to happen in the weeks to come by beginning of next week. So let's quickly run through what happened on Friday when pivoted in the Jackson Hole symposium. He said that we'll shift focus from to jobs data rather than inflation. So inflation has not been coming down significantly. Once it has stabilized at around 3%, it is not coming down, and jobs data has been poor. So Fed has got a dual mandate, which means they have to stabilize jobs as well as stabilize inflation. And so he has moved on from inflation to jobs. So he says we need jobs, so we need to give some stimulus to the market by relooking at the interest rate scenario. Now, you see, the thing is, at in the beginning, or rather, right now, that's absolutely brilliant news for the markets. The U.S. markets took off. Dow and Nasdaq approximately 2% higher. They went up. S&P went up about 1.6%. That is only the beginning of the story. So, apart from the equity markets, there was also some action which one could notice in the dollar, one could notice in the precious metals, and one could notice in the US 10-year yield. So, let's again, before we go to those charts, I put some charts which are very interesting. Before there we go, of course, the Powell is talking the same thing. He reaffirms 2% inflation target. Currently, inflation is 3%. And so Trump is fighting with him, saying you should have cut interest rates at least 100 basis points. And please note that this is the last Jackson Hole symposium of Powell because he's retiring next year, early next year. So what happened that day was, as I said, S&P jumped higher, 1.5, highest since May. Bitcoin jumped 4%. Ethereum also went up. 10-year treasury yields fell by 8 basis points to 4.26. That is where the big issue is. So once you're going to reduce interest rates, the US 10-year treasury yield will come down significantly. Gold rose. Gold has been very stable. Gold rose up, and silver took off. That is the most important thing, is silver took off, where we are heavily invested in silver. and then dollar index also came down. So basically, as I said, precious metals, gold, silver, and the US 10-year yield. These are the things which will get affected, and base metals also shot up. So if you look at what happened to the gold, for instance, if it is this is on April 9, the gold has been just in a steady band. It has not made a new high somewhere in April, May. After that, it has not done anything. So it will take some time for it to break this barrier. It will break, I feel, sooner than later. Most likely to break sooner than later, and then it will give about maybe a 15% rally seems to be there once it breaks this red colored band. Now, if you take silver, for instance, silver is slightly different from gold. Silver has been slowly and steadily going up. Gold has been stagnant for much longer time. If you look at it, gold has been stagnant right from April onwards, whereas silver has been stagnant only from August. So silver is on that way much stronger. So I think silver will lead gold now because of the Powell's pivot. See, US 10-year Treasury yield, it's been coming down steadily. And this was on Friday, and by and large, I think we should see lower levels in US 10-year yield. Then, if you look at dollar index, people were very, very bullish on dollar, and slowly and steadily it has been coming down. You can see the downtrend. It is not able to sustain higher levels, not even crossing 100, and now it's about 98 levels. And what it means is that rupee will strengthen, which will affect the exporters, but which will help the importers. So there is a lot of dynamic action there. But whatever it is, I think you see the the pivot which she has done is where the entire thing is going to change, and that will create havoc in the equity markets in a positive manner. So you will see, in my opinion, I will not be surprised if you see S&P, for instance, which is at 6,500, to go to 7,500 plus within a short span of 6 months. So I expect a rally which will be spectacular across the board, US beginning, US centric. But I also feel that will come and hit us also in terms of the rally. We may not go as much as US because we have our own problems of the Trump's tariffs of 50%. But if anything, if any, what they say, fertilizers or rocket fuel is required, I think Powell is given the rocket fuel, and that will take global markets up, and I'm sure India also will follow. So this is a very important development. Many people may not understand it, but having studied interest rate scenarios, I can tell you that there will be a significant move upwards, because what is happening is once the Fed starts cutting, it just doesn't cut at one and then leave it. They say one and done. It won't happen like that. And also, please note that next year the new governor is coming. The new Fed chairman is coming. Sorry, and Trump has said that he would like a Fed chairman to actually be cutting interest rates. He's looking at 100 basis points. And if the new Fed chair, whoever comes, I'm sure he will follow Trump's diktat, because Trump will appoint the new Fed chair. So next year, so the markets know that, and markets will factor that in. And there, in my opinion, there will be a relentless rise as far as the equity markets are concerned. There will be a weakening of the dollar, which Trump actually wants it. The US 10-year yield will weaken, likely to weaken, not will. All of them are likely to weaken, which is what the Treasury Secretary wants. Then the precious metals will are likely to shoot up because they're heavily short. People are the large operators are heavily short, and there is a need for precious metals in even the. I'm talking about, if you take silver for instance, it's much required in our EVs, and then base metals will go up because inflation targeting is not there, which means inflation can shoot up. So I feel we will have a significantly high rally, a big rally in equities and in precious metals, and downtrend in gold, and the downtrend in dollar and oil. Inflation will go up. We will suffer the effects of it next year. There could be a significant correction in the US market somewhere in the next 1 year, maybe end of 26. But what we are looking at it is to capture this, and get into stocks now, metals, precious metals, and stocks which are local, which are not going to get affected by the Trump's tariffs. and we should be on a good wicket as far as bullishness is concerned. So what we are doing is we're trying to pump in more money because we believe that this is an opportunity, and these opportunities don't come all the time. So this pivot is going to make a huge difference. So you may want to take a look at your portfolios. I am not a SEBI registered advisor, so please do your own due diligence. Whatever I do, I'm telling you here, we are extremely bullish. So have a nice weekend, and thank you for joining me.